Hello and good evening. Thank you for joining. As you can see, we are starting on time. So this evening, what we're going to be doing is just going through UK mortgages. So this is for first-time buyers, people that are looking to remortgage, or just anyone that wants to understand more about mortgages. So hopefully everybody feels that they are in the right place and you will be able to put messages or questions in the chat. Just by coming off mute for a second, could everyone just let me know that you can hear me and you're happy to get started?
Well, I can hear you.
Okay. Can everybody else hear? Yep.
Yeah.
All right, perfect. So I will look at the messages in the chat and I will answer them. Probably they will be covered off during the presentation, but please put your messages in the chat and I'm more than happy to address them. So I will tell you a little bit about myself. My name is Anthony Lindsay. I've been in finance for over 30 years. I've done everything from debt management to wealth management, to lending and mortgages. The reason why I always share this information with people is that you know that what I'm telling you is not just from the perspective of getting you a mortgage, but it's also a holistic guidance and advice that you understand how to manage your finances. And when I talk about the debt management, one of the things that I did do was pre litigation. So I was one of the people that at HSBC would look at a case file prior to foreclosure before it went to court to ensure that the bank had done everything that they could do to make sure that the person could stay in their home. I would go to people's houses. So I take getting someone a mortgage very seriously. I'm not just someone that wants to get you in a property, but not ensure that you can afford it and maintain the property. Who here, just by coming off mute, knows the difference between a broker and going directly to the bank? Okay. Um, or you can put it in the chat. So a broker is a middleman. So to a degree, a broker is a middleman, but there's benefits of going to a broker. So about 15 or 20 years ago, and I'm looking at Halifax specifically, but Halifax is one of the biggest lenders on the market. Halifax only did about 15% of their business through brokers. Now they do about 75% of their business through brokers. So a broker is a middleman, but the benefit of going to a broker as opposed to going directly to the bank is the fact that when you go into your bank, you're talking to a mortgage advisor. And the reason why there's a difference between the broker and the bank staff as a mortgage advisor is the fact that that individual can only talk to you about the products that that bank offers. So they may be giving you the very best deal available from that bank, but it doesn't necessarily mean that they're giving you the very best deal for you. So it gives you more choice by going to a broker. I personally work with over 30 different lenders, and those 30 different lenders have different criteria. Also, service. Quite often, you'll find that a salaried employee isn't going to give you the additional service because you've walked into that bank asking for a mortgage. Whereas with a broker, we have to work hard to get your business. And because we know that you have other options, we have to work hard to keep your business. And the last bullet point on there is protection. The FCA requires mortgage brokers to discuss protection with you because we're giving you an advised mortgage service. So we are required to talk to you about protection. And by protection, I mean life cover, income protection, and critical illness. We'd also talk to you about wills and your content insurance and your property insurance. So if you speak to a broker and they start talking to you about these things, It's something they have to do, and actually they're doing the right thing because they're making sure that you and your family are protected. So who's involved in getting a mortgage? Now, there's three key people that are involved in getting a mortgage, and it would be your broker or the bank, the person that's going to get you the mortgage, the estate agent, and the solicitor. Now, the interesting thing about this is out of all three entities that are involved in the process, only one of them actually works for you. So the broker is the only person that actually works for you because the estate agent works for who? You can put it in the chat. Who does the estate agent actually work for? The seller. Miriam seems to have all the answers. I'm going to have Miriam take over the call in a minute. Yeah. So the estate agent works for the seller, and they're not bad people. There are some bad estate agents, just like there's some bad everything. But the estate agent's job, and they're contractually obligated to get the highest sale price for the seller. So they don't work for you. So no matter how nice they are, no matter how they try to chat you up and be friendly, they are working for the seller. And when you come to the point that you're going to sell your property, that's what you want. You want someone that's going to work for you. And then the solicitor, although you're paying them, they essentially aren't, they work for you, but they kind of just covering up all the legal stuff anyway. So they're responsible for making sure that all of the documents are executed correctly, etc. So why do I bring this out when we're talking about mortgages? Um, One, because you should find your broker before you go through the other stages of the purchase. So I always advise people 6 months before you think you're ready for your mortgage, start speaking to a broker. Because a lot of the things that are going to reduce the options that you have when you're making your purchase could be remedied 6 months prior. So we can give you advice, and I'll give you some of that advice on the call. The other reason why I say that is because the estate agent, because they work for the seller, they're not going to want to waste their time with anyone that can't actually afford to buy the property. So they're going to ask you for something called an agreement in principle or decision in principle. Now, I do want everybody to know there is something called conditional selling. You may have seen it in the news. So please note, an estate agent by law cannot tell you that you have to have an agreement in principle prior to showing you a property. They also cannot pressure you into using their broker. So I'll say that again. By law, they cannot force you or pressure you into using their broker. Now, there's nothing wrong with an estate agent saying, listen, we have brokers that we work with, or we have an in-house broker. We'd like for you to talk to the broker. We'd like to have them qualify the deal. That's fine. But if you say, no, I already have a broker, or you say, no, I don't want to see that broker, they cannot make you feel as if you're not able to view the property or purchase the property unless you use their broker. And what I would say, if you're dealing with an estate agent that out the gate is going to do something that is illegal, then I would try to avoid working with that estate agent. All right, so there's a few uncomfortable truths I always like to share with people, just that you know what is going on with your deal and what the thought pattern is. So the first one is time kills deals. So that's essentially saying that the longer it takes for the purchase to go through, the less likely it is to go through. The other one is buyers are liars. Now, this is something that if you were to have a fly on the wall in an estate agent, you'd hear quite regularly. Now, it's not meant to be demeaning, but it is actually true. So let's be honest. If you were purchasing a home, or some of you are looking to purchase a home, you're not going to tell the estate agent what your top number is. Am I correct? You can put it in the chat. You're not going to tell them. So if you know your budget is 230,000, you're not going to tell the estate agent that your budget is 230,000. If you're a seller, you're not going to tell the buyer that although we are marketing the property at 230,000, I'm willing to take, 205,000. You're not going to tell them. And then the estate agent who's in the middle kind of has to walk that tightrope between getting the seller as much as they can and trying to get the buyer to raise their offer as much as they can. So that's why they say buyers are liars. But to a degree, everyone in the transaction isn't being completely honest or forthright. And then another uncomfortable fact is that 50% of all purchases don't go through. And that could be because of the buyer, that could be because of the seller, it could be because of a range of reasons. And keeping in mind that there's no contractual or legal obligation for the seller to sell or for the buyer to buy until towards quite far into the process. So we're going to just look at the key stages of a purchase. There may be some things you guys know, there may be some things you don't know, but we're going to go through it just that you can understand. So the initial stage is the financial assessment. So that would be when you as a buyer start looking at your finances. That's where you're starting to see how much you have for a deposit, what your credit rating is looking like, how much a comfortable monthly repayment is for you. So that's the initial bit. Who here is at that stage? You can put it in the chat. Who here is at the stage where you're just saying, you know what, I saw this free workshop and I'm considering getting a mortgage, not ready to buy, but I'm just trying to assess my finances. Put it in the chat. Or you can just put a note saying me. So, as I said, you should do that 6 months prior to making your purchase. The next stage, and this is the correct process to follow, the next stage is to get your agreement in principle. I'm going to say two things that are contradictory. An agreement in principle is very, very, very important. So that's the first statement. The contradictory statement is an agreement in principle isn't worth the paper that it's written on. The reason why I say that it's not worth the paper that it's written on is an agreement in principle is not a credit check. It's not an application. It's essentially you're putting information in a form and it's giving you a decision. All right. If you read the fine print, it will say that, this is not a binding contract. So I could, for anyone on this call right now, log into my portal and get you an agreement in principle for £1,000,000. Because all I'd have to do is put the right numbers in. So if you notice beside that, I've put £295. I'll come back to that. So once you have the agreement in principle, the next step is to search for the property. The reason why you want to get your agreement in principle before you start your search is because the agreement in principle, if done properly, will give you guidance on how much you can actually borrow. It will also give you guidance on who would lend the money. So you get your agreement in principle, and then you start searching for the property. Once you find your property, there's a negotiation stage. So one thing to keep in mind is that the whatever price you see a property being advertised at, it's just a marketing price. It's not based on anything because although you look at properties in the area and the seller might have a feel for how much it is, a property's value is essentially what someone will pay for it. So you could have a house that all of the other houses around it are worth 300,000, and this house is worth 500,000 because one of the Beatles used to live in it, and someone would be willing to pay that additional amount because one of the Beatles used to live in it. Or you could have a property that's worth 300,000, but the property next door comes up for sale, and the person that owns that property wants a family member to move in next door that they can knock the wall out and make it larger. So they may be willing to pay more for that property. But the property value is what someone will pay for it. So what you want to do is make sure that when you're negotiating, you negotiate based on how valuable that property is to you and in line with what you think the bank is going to value that property at. Because although there will be a negotiation. Once you've done that negotiation, what's going to happen is the bank is going to come in and do a valuation. So you may have agreed a price of, let's just say, £230,000 for that purchase. You may have agreed that with the seller, but once you get into the stage where you do the mortgage application, the bank's going to come in and do a valuation. One of three things can happen when you do that valuation. The bank can come in and say, "Yeah, I think it's worth 230,000. That's great. That's a good place to be in because then that means the agreement in principle that was in place converts into an offer and all the numbers stay the same." Scenario number two is that the bank could come in and value the property higher than the agreed price. That doesn't happen very often, but that could happen. The thing that you really want to look out for is if the bank comes in and values the property below the agreed price. So again, let's use that figure of £230,000. You found the property, I got you an agreement in principle for the £230,000 or minus the deposit, whatever. Let's just say £230,000 mortgage. And then the bank comes in and says, well, actually, we feel that the property's value is 200,000. Does anyone know what happens if the bank comes in and values it below what the agreed offer price is and the agreed price that was accepted is? You can put your answer in the chat. Anyone? I'm counting on you, Miriam. Okay, so if the bank comes in, oh, I heard someone. Go ahead. Anyone? All right, I thought I heard someone. So if the bank values it at less than the agreed price, what would happen from there is you would either have to come up with the additional money, so that additional 30,000, or you'd have to restructure the deal. So it's always really important that when you're putting together your budget, you take into account that the bank's valuation is what actually counts because the bank is going to secure the mortgage against that property. So you get the mortgage offer. That's when everything really starts to move. That's when the solicitor goes into play and starts doing searches. What I do recommend is from the moment you start the process and have found a house that you're interested in purchasing, I would recommend you get a solicitor lined up. If you work with me, I can help you find a solicitor. And one of the things to consider is not all banks work with all solicitors. So if you just have a friend or family member or someone that has referred a solicitor to you, do keep in mind that when you go through with the mortgage, depending on the lender, that solicitor does have to be on what they call the panel of solicitors that that bank works with. So you just go through all the legal stuff, then you exchange contracts, and then you move in. So that's a quick overview of the process. The current timelines in the UK are about 6 months. So that's the average. So you do have some purchases that might take a year, might take 9 months. You have purchases, especially if you're going through auction, that may take 30 days to 45 days. But on average, it's about 6 months, and that's with no chain. And a chain would be if someone is selling their house but needs to find a new house to move into before they can sell their house. So just going to go through a few things on how to get the very best deal. So I can help you negotiate the very best price possible. The reason why I can do that is because I do this full time. Most people buying a house are doing it in between working, family, going to school, whatever. So that means the hours that you are at work and the estate agent is at work, that's when the negotiation would take place. And it's not always convenient for a buyer to be able to, go off into a room and talk about their personal finances. So it is good to use a broker to do the negotiation. I will say that most estate agents don't like that. Most estate agents don't like the broker doing the negotiations. But That's just too bad for them. One of the reasons why they don't like the broker doing the negotiations is because they know that the broker is going to be a lot more skilled than the client when it comes to the negotiation. Best tips. So one of the tips for getting a mortgage I would say, check your credit file. Check your credit file, I would say 6 months before you're ready to purchase. As someone that worked in collections and pre-litigation for over 10 years, what I have found is most people don't truly understand their credit report or their credit status. I do understand that a lot of banks and a lot of like ClearScore and other platforms will give you a credit score. So your bank will have something when you log into the app that has your credit score. But that is not a fully comprehensive credit overview. So the only the only credit document that I accept and most brokers is the one that is generated by a platform called checkmyfile.com. That's checkmyfile.com. The reason why brokers use checkmyfile.com is because it's the three bureau report. So it's Equifax, Experian, and TransUnion. It will give voters roll history. It will give balances. It will give CCJs. It's a comprehensive overview. As a consumer, you should check your credit report once a year. There's a couple of reasons for that. A, you want to check your credit report to make sure it's accurate. Um, Probably 6 out of 10 cases that I do, so that would be 60%. When the person looks at their credit report, they find something that they were unaware of. It could be a positive or a negative because sometimes people feel that their credit is worse than it actually is. Sometimes it's better than it actually is. And quite often, what happens is, especially with couples or people that have had long-term relationships, they may have taken out credit with someone else, and that's formed a link on their credit report, and they've forgotten all about it. Or sometimes people have maybe taken out a credit card, used a credit card, and just paid it off and not used it for so long that they forget that they actually have it. And that can cause a problem when you're doing your application because banks don't like what's called non-disclosure. So non-disclosure is when the credit application is being completed and there's something that's on the credit file that is not on the mortgage application. So that's why you, as a consumer, at the very beginning of the process, before you may even have all the money to make the purchase, what you want to do is check your credit report. Any missed payments or late payments, you want to try to tidy up. If you have small balances, like if you have a credit card and it has a, 89 pound balance on it, and you can afford to pay off all of the small things. Don't close the accounts though. Okay. So don't close the accounts because that will affect your credit rating sometimes adversely. So pay off all the small things that you can that will give you more affordability when you go to get your mortgage. I would say even if you've got missed payments or CCJs, that's not going to prevent you from getting a mortgage. It will just mean that you'll probably pay a higher interest rate and there'll be fewer lenders that you can go to. But if you go to a broker, there's lots of lenders who will lend money even if you have missed payments, CCJs, anything along those lines. What they usually want to see, though, they usually want to see that you're now current. So if you can pull your credit report 6 months prior to when you're ready, make sure that you get current on all of your bills and stay current for the next 6 months. That's going to put you in good shape. As I said, guys, put any questions you have in the chat. Now, another good rule of thumb, especially now that interest rates are pretty good on saving accounts, move all of the money that you have for your deposit into one account. There's several reasons why I say that. Reason number one is it's a lot cleaner when you're doing your mortgage application and you have to prove the savings that you have. It's a lot cleaner if you can just send over a bank statement where the money has been there for a while. It's easy to trace where the funds came from. That's number one. Number two is because there's some really good savings rates out there, usually not with the high street banks, usually not with the high street banks. But if you go to Money Saving Expert, you can find some really good competitive savings rates. And you know, if you're on Money Savings Expert, that you're getting reputable banks that are all guaranteed. And depending on how much you have for a deposit, think about it this way. Let's just say you're one of those lucky people that has a lot of cash to pay down on the property. Let's just say you put £80,000 in a savings account. You're going to be getting interest on that every month. And because you don't actually use that money, so you don't actually pay that deposit until quite far into the process, and because the average mortgage takes about 6 months to complete, that means that money will sit in there and be gaining interest for about 6 months. So it's not going to be tons and tons of money, but it can be enough to offset some of your expenses. Now, do keep in mind that there's a cap on how much interest you can earn each year. So I'm not giving you financial advice in that sense, but I am just giving you some practical advice, and you can crunch the numbers to see how much you will actually earn in interest by putting it all in one place. Another tip is clean up all your credit cards, pay off small debts, ensure all credit cards are managed responsible, and cancel any unnecessary direct debits. So let me be clear. I'm not saying close cards or revolving credit cards, but if you have like direct debits and you don't need that particular product, service, or subscription, cancel it. And as I said, we're doing this 6 months before you're ready. That way, when you go to do your mortgage application, you'll be able to maximize the amount you get because you'll be able to afford more of a repayment. Track your spending closely, lending leading up to and during the buying process. I've seen some people do this. They do the mortgage application, the mortgage is in process, and they start applying for other credit. Don't do that. So until you've moved into that home, you're settled in, don't apply for any more credit. Lenders don't like to see that. But also keep in mind, when you get that mortgage, you will probably see a dip in your credit score. There's a couple of reasons. One, you now have a huge loan on your credit report. And then the second reason is because you're going to be changing addresses. And one of the things that impacts your credit score is the length of time that you're at your address, being on the voters roll, etc. Keep in mind, especially if you're someone that's been renting, owning your own home is expensive. One of the benefits of renting is the fact that if something breaks, the landlord has to take care of it. When you own your own home, you're responsible for everything that happens in the house. So don't forget about expenses when you move in, but also don't forget about the expenses of actually getting a mortgage. So understand they're not hidden costs, but additional costs. So stamp duty. And make a note to yourself, guys, the stamp duty is reverting to pre-COVID levels as of March of 2025. So if you're a first-time buyer and you were counting on a lot of the first-time buyer stamp duty discounts, you probably missed the boat because you'd have to complete your deal before March of 2025. Okay? So don't forget about stamp duty. Don't forget about legal fees. So the solicitor is going to charge you for searches, etc. And these are expenses that are going to come out of your actual pocket. All right. So these aren't expenses that you can roll into the mortgage. These are expenses that you're going to have to pay. These are hard costs. So make sure that you have that money available. Also remember that it's going to be a little bit more expensive to do a leasehold property than it is a freehold property. So if you're buying a house, it's usually freehold, and the legal costs are a little bit less for freehold than leasehold because leasehold is a little bit more time consuming for a solicitor. You're going to have your moving costs, potential repairs, and renovation. Building a strong financial profile. So it's important to maintain a steady job and income. So one of the things that lenders are going to look for on the application is, are you on probation? How long have you been employed at the particular employer? And how long you've been employed in general. Now, if you're young and you're at the beginning of your career, it is what it is. But banks and lenders want to see that you have some stability in your job. And here's some good news for somebody out there. One of the things to consider, and one of the great bits of information, is that some lenders will do a mortgage based on a job offer. Okay, so you don't actually have to be in the job, you just have to have a job offer, and you're starting within the next 3 months. So you have a job offer and you're starting within the next 3 months. Now, that won't go for smaller companies. So like if it's your cousin's, construction company and he writes a letter saying he's offering you a job, that won't fly. It would have to be with a large company, a reputable company, someone that they can search on Companies House and see that it is a viable company and that, it's not owned by a relative or family member. As I said, avoid taking out new debts or making large purchases during the mortgage application process. All right, so this is basically an overview. So I've gone through the steps. I've gone through some hints and tips of getting a mortgage. I've explained who's involved in getting the mortgage. Now, for the people on the call, what is the next step for you? So the first step, as I said, would be to get your credit report. You want to get your credit report. I'm going to put it in the chat, www.checkmyfile.com. Now, the great thing about Check My File is that if you've never used it before, you get a free account for 14 days. So what a lot of people do is they would log on, they would get their credit file, which you can download immediately, and then if you cancel the account, you don't pay for it. So make sure you get the Check My File credit report. Then you can start house hunting, because when you then go and speak to an estate agent, you can say, listen, I have my agreement in principle, I have a broker, and if you work with me, I'll have a solicitor for you. This will help you get the best price because, as I said at the very beginning, time kills deals. So, what you might find is you might have two competing offers as a seller. Now, if I'm trying to sell my property, I would rather go with the person that's the most ready, the person that has the solicitor ready, has the agreement in principle ready, and is ready to go. I might even take a little bit less because that person seems a little bit more serious. All right, so Miriam, great question. If your family give you money towards your deposit, how do you explain it to the lender? That's a really, really good question. Now, this is a tricky one, more for the person that's giving you the money than for you. So, number one, each bank has different criteria, but in most banks, they will accept what's called a gifted deposit from a parent or a sibling. Some banks will accept it from cousins, etc., but not every bank will. So, first and foremost, you have to look at the relationship of the person that is providing those funds. That's A. B, you have to remember those funds have to be trackable. So you'd want it to be someone that is within the UK, someone that can verify where they got the money. So I'm Jamaican. So anyone on the line that's Jamaican will be familiar with Podmas, which is where everybody will put a certain amount of money in an account. Every week, different people put money in that account, and every week somebody else pulls from that money. Now, that's not going to work with lenders because they're going to say, well, where did those people get that money? All right. So you need to make sure that those funds are trackable. And the other thing is, they're going to have to sign what's called a gift letter. And this is where it gets tricky for the person that's giving it to you. If they're saying that they're giving you the money and they don't expect for it to be repaid, and I've seen this happen, then they're giving you the money and they don't expect for it to be repaid, which means if your brother signs that letter and says, I'm giving, my brother that money, and I don't expect for it to repaid and then be repaid, and then he comes and you kind of had made a deal that you are going to pay him, and then you don't pay him back, he has no legal recourse. The flip side would be if the person is lending you the money, then it's a loan, and then it comes out of your affordability. So the downside is if they give you that money, that £30,000, the bank views that as a loan, and then they'll say, well, you have to pay that loan back, and that will come out of your affordability. Mark Anthony, for someone who has 0 hours contract, how many months pay slips is required? I've missed payment in August 2020 with Halifax and Thames Water. How does it affect my mortgage application? Great question. I'm so glad that you asked that. If you have let me just say this, and this is going to be the catch-all for every single question that is asked. Every bank is different, which is why when you speak to your broker 6 months before you want your mortgage, he'll be able to line things up for you. 0 hour contracts, some lenders will take all of it. Some lenders will take 50%. Some lenders will take an average of the last 3 months. So you're probably going to have to provide a P60, and you're going to be limited in which lenders will lend, and you're going to be limited in how much of that income that they actually accept. And as far as how many pay slips are required, it's going to be down to the lender. It's always going to be a minimum of 3 months. So depending on how you get paid, it might be, if you get paid bi-weekly or whatever, it'll be more, but you're going to need 3 months. The other thing that's going to determine it is what industry you're in. So there's a difference between a 0 hour retail worker and, I'm going to make this up just for the sake of demonstration, a 0 hour attorney. So if you've missed payments in 2020, I wouldn't worry about it too much, as long as since then everything's been fine. If it was caused by COVID or something like that, lenders are taking into account that COVID was a crazy time for everybody. So they're a lot more forgiving as long as the period before that and the period after that you've managed your finances well. I get paid weekly, don't have P60 at the moment until next year. So I would say in most cases, you're going to need to provide as many pay slips as that individual bank is requesting based on your other circumstances. So that's not one that can just be answered with a yes or no. It's going to depend on the lender. But I will say it may be that the lender is not going to take the um, full amount because it's a 0 hours contract, but it will depend on the industry, etc. So using not your example, but using a general example, if someone's on a 0 hours contract and they work in like a restaurant type environment, obviously November, December, are going to be busy months because it's the holiday season. So their income's going to be a lot higher. A bank's going to know that. So they're not going to take that into consideration. If you work for the NHS, there's some good things with the NHS as far as how the calculations are done, but it would all depend on the overall profile of the individual. I'm going to give you guys a few tips as well. So there's a myth that circulates amongst people that don't really know about mortgages but think that they do. They talk a lot about percentages, deposit percentages. So when I do my initial interview with clients and I'll say, how much do you have as a deposit? They'll say 10%. I just sigh and I do an internal eye roll because 10% isn't a number. So if someone tells me they have 10%, but then they tell me, they're looking at houses between 23,000 and 27,000. Sorry, 230,000 and 270,000. Obviously, 10% of 230,000 is different than 10% of 270,000. So always work in numbers because as far as the percentages that a bank will require for a deposit, it's going to be dependent on so many other things. So the perfect client is this. A perfect client is UK passport. When I say perfect, the easiest client to get a mortgage with the most lenders. A UK passport, PAYE employment, so full-time contract employment in their job for more than a year, at the current address, and on the voters roll with a deposit of 25%. If you have those things in place, you can get a mortgage with anyone pretty much. But if you have a non-UK passport, then a lot of the criteria changes, especially if your income is less than 100,000. Because with an income of 100,000, a lot of the criteria that you would have to meet for a non-UK citizen, you don't need to meet. They view you almost as a UK passport holder, or if you have a 75%, sorry, 25% deposit. I hope I didn't say 75% before. If you have a 25% deposit, again, lenders look at you like you're an ideal and perfect client. So you can't change your passport in the sense that if you don't have a UK passport, you don't have a UK passport. Um, that's just the facts of life. But if you have a non-UK passport, then you will find that a lot of lenders are going to want a higher deposit unless you're on 100,000 or more. Question: how much does immigration status matter when lenders are considering giving a mortgage? The catch-all answer to every question that will be here, but that's a great question because it gives me a chance to address that, is it depends on all the other factors. So if someone has a tier 2 visa, most lenders need to know that you've been in the country for at least 3 years. Most lenders need to see at least 2 more years left on your visa. However, if you are on 105,000, the visa status doesn't really make as much of a difference because lenders are more open to just treating you like a UK passport holder, or if you have a 25% deposit. So the immigration status does matter, but there's so many other factors that are going to go into it that will affect what they will lend. But this is the beauty of working with a broker. When you talk to your broker, just be honest, be upfront, let them know all of the criteria that they can match you with a lender that lends based on that criteria. So one of the things that I love doing for clients, because I have so much experience in collections, I love working complex cases. So I love working with clients who have had missed payments, CCJs, had a bump in the road, and I have lenders that I work with that's what they specialize in. Now, the caveat is the interest rates are going to be a little bit higher. But if you use that as an opportunity to reset your credit profile, so you get the mortgage, you manage that mortgage well and your other finance as well. When you go to remortgage, then you'll be able to get probably a high street lender to lend you money because you've re-established your credit profile. So that brings me into another topic, the mortgage term, remortgages, and benefit period. So another tip that I would give you, and this comes from my collections background, quite often I speak to clients and when we're talking about the mortgage term, so that's the big number. It's not the 2 year, 3 year, 5 year. It's the big number, 25, 35, 15, 10, whatever. Um, keep this in mind. The overall term, so that's the big number, the term, isn't that important. So I had a client that I was speaking to earlier today, and they were saying that they want their mortgage term, that's the big number, to be about 10 years, but yet they wanted a specific payment. I said, listen, let's make the term as long as possible to get you the monthly payment that you want. And the reason why that is you're not fixed in for the entire term. If you do a fixed term mortgage, you're only locked in to a degree. You're only locked in for the benefit period. So that might be 2 year, 3 year, 5 year, whatever you decide. Now you can leave that mortgage earlier. You'll just pay an early repayment charge. But most lenders do allow borrowers to pay up to 10% more per year. So If you take it out over a longer term, you can still overpay. But the danger is if you take it out over a shorter term, and it means that the monthly payments are like stretching you a little bit. When life happens, meaning in your new home, the roof leaks or you have to do something, you're going to still have to make that contractual monthly payment. And if you don't, you're going to have a late payment or a missed payment. It's going to impact your credit. Whereas if you were taking it out over a longer term, for lower payment, it gives you more breathing room, but you can always overpay it. Does that make sense? By a show of notes in the chat now. Obviously, I'm not speaking to any one individual, so I can't give you specific advice based on your appetite for risk or the way that you manage your finances. But I've seen too many people take out mortgages and just be so focused on the overall term that they make a higher monthly repayment than is actually comfortable for them, and then they regret it when they could have just taken it out over longer term and then just overpaid it. But the only caveat and the big thing I would say, you have to be very careful because if, let's just say, your mortgage agreement only allows you to overpay by 10% each year, and you go over that 10%, it will trigger an early repayment charge. So do the math, contact the lender, make sure you stay under that 10%, that you don't trigger any early repayment charges. Are there any other questions? Because this is basically the Q&A part of the session. Ben, is there a maximum age at which lenders will agree a mortgage, and what is the shortest term for mortgage? As with all of the questions, different lenders have different guidelines. Most lenders nowadays will lend up to about 80. Some have a maximum of 75, some 70. It's going to depend on where you it's going to depend on what kind of job you have. So if you have a very physically intense job, then it they may not lend past retirement, the natural retirement. Also, what you have in place. Do you have pensions in place? Can they see that you're paying into a pension scheme? Minimum age, again, I think the legal minimum age, I want to say is 19, but some lenders, it might be 21. And keep in mind, you're trying to balance a couple of different things. So you might find someone that does have a higher maximum age, but you might not meet the other criteria to qualify for that deal. That's a really good question and a question I get all the time. So as far as maximum ages, there's a lot of criteria, but I would say for a standard mortgage, I would say probably around 75 is going to be the maximum age, and it's going to be dependent on the type of job you do and if you have a more pension in place or are paying into a pension. And as far as the shortest term, I believe the shortest term I've seen personally would probably be it. So there's going to be two factors. It's going to depend on the minimum amount because there's minimum mortgage amounts that lenders have. And as far as the shortest term, I think the shortest term I've seen is 10 years, but every lender has different criteria because different lenders have different client bases that they're trying to attract and that they're trying to work with. Another really good question, is a leasehold a good option if you can not get a freehold? Most properties on the market are leasehold. Well, most houses are freehold. Most apartments are leasehold. Um, it kind of like it kind of doesn't matter potentially moving forward because there is legislation that they're looking at to do away with leaseholds anyway. But what I would say, if it's the house you want, what you're going to want to look at how long is left on the leasehold, because most lenders, once you start to get to short leasehold, like 80 years and under, a lot of lenders won't lend on it. Okay, so it's not so much if it's a leasehold or a freehold, it's how long is left on that lease. Okay, so what a lender wants to see is that after you finish your mortgage, there's going to be a certain amount left on the lease, but there are some lenders that will lend on short leaseholds, but it's just going to limit who can who will lend. What happens if someone dies before their mortgage then the estate has to pay for it. It's a loan. It's a loan, so it will come out of the estate. But at the very beginning, I was talking about protection. It's a legal requirement that as a broker, the broker will talk to you about life cover. I've been on both ends of this, and I don't say this anecdotally. I don't say this just to say it. I've done mortgages for people who um, took out life cover, and then one of the partners died, and they've come back into the branch and said, "Thank you so much. I'd rather have my husband, but you know, I don't have that debt because the life cover paid it out." And I've had people that didn't pay it out and have come back into the branch and said, "Oh, I know we must have had insurance," and they didn't. This is why the FCA now requires, as part of a mortgage application, for there to be a fact find and a quote on life cover, income protection, critical illness. All right, so it's required that they do that. If you are taking out a mortgage and you do not take out life cover, my opinion, it's very irresponsible. Even if it's not joint, because someone's going to have to cover that debt, or the estate's going to have to cover that debt. So that's what happens. Mark Anthony said 117. If you're talking about the leasehold period, that's a decent. That's going to be a decent term. That's going to be a decent term. But as I said, potentially in the next two years, they're going to do away with leaseholds anyway. But you don't know what's going to happen. So I would say that's a comfortable one. If I had a mortgage application and someone was looking at a leasehold at 117 and everything else is good, I wouldn't have any concern. So we have about 4 minutes left. Is there anybody else that has any questions, or does anyone want to share a scenario? And I can talk them through it. Um, if not, what I would say, I do these workshops once a month. As you can see, I'm not here to sell you anything. I just want to educate people. If you have any friends, if you have any family, first time buyers, even remortgages, because they say 47% of the population don't understand, even 40% of mortgage holders don't understand how mortgages work. So this is a good opportunity to be equipped with knowledge. One of the things that will happen is I will send you some updates on just some common questions that I get asked. I'll send you send you an email with some terminology that you understand the terminology, because quite often, especially when you work in a field and you're used to acronyms, you might talk to a mortgage broker and they might talk through things quite quickly, because the truth is, when you're sitting and talking to a mortgage broker, the only thing that really goes in is, can I get the mortgage? Yes or no? How much am I paying? What is the interest rate? All of the other things that the mortgage broker tends to go over with you and has to go over with you, it just kind of is one of those things until you actually move into the house, and then you're like, oh, what is SVR? What is this, that, and the other? What other charges if you are engaged as a broker? So I did say I would go back to that. So the way that my process works, and I lose probably 7 out of 10 people, the way that I work as a broker, I work backwards. Okay, so what I mean by that, a lot of brokers that you speak to, especially, well, banks don't charge, but I wouldn't recommend you go to a bank. A lot of brokers, what they'll do is they'll get you that agreement in principle, like out the bat. They'll just ask you for your name, first name, last name, email address. They'll ask you questions, but not ask you to verify anything. They'll get you an agreement in principle. And then when you find the property, that's when they'll do the due diligence. So the reason why I lose clients is because I do all the hard stuff first, and clients, they just disappear because they're like, well, the other broker I spoke to just asked me this and they've sent me an agreement in principle right away. But on the flip side, most of the new clients I get, the conversation start, and I got one of these calls today. The conversation starts like this: I had an agreement in principle. I was working with a broker. I found the property that I wanted. And when I went to make the purchase, the bank changed their mind. I had this today and it happens all the time. The bank did not change their mind. The bank's criteria was the bank's criteria. It's just that the broker didn't start doing the due diligence until 3 months into the process, which means you've now wasted your time and it just puts you in a situation where you may lose that property. So the way I work, if you see stages, step one, we do the initial consultation. I will gather all of your documents. I'll gather 3 months bank statements, 3 months pay slip, piece everything that I need to assess the deal. I'll speak to the my business development manager at the bank that I think will lend to you. I'll generate a illustration for you. Once you accept the illustration, which is an exact duplicate of what the final offer would look like for the most part, I charge £99 for anyone within our group. I charge, or anyone that was on this call, you'll get a discount. So I charge £99 for the agreement in principle. Once we convert that agreement in principle into an offer, I charge £495. So once we do the actual application, get you your mortgage offer, I charge $495. So it's £99 for anyone that's on this call that is a part of my network and for the application. And because of the way that I work, unless something comes out of the blue that none of us knew about, which is very rare, you're assured that you're going to get the agreement in principle because I've already got your credit report. And I've already worked through everything and talked to a business development manager. So £99 plus 495. If it's a buy to let property, then the application fee is 295, but then the broker fee is still 495. I applied for a mortgage in June with Coventry Building Society. My application was rejected due to my credit report from I checked my file. It shows I have missed payments with Thames Water and Halifax. I don't know what to do with this. If they are legitimately missed payments, there's nothing you can do with it. This is why I've stressed always do the credit report bit 6 months before you're ready to move. But you are where you are, Mark Anthony. What I would say is if you've had missed payments and they're legitimately missed payments, then there's nothing you can do. If they weren't, then you can do you can contact the credit reporting agencies and they can amend your file. You will need to be able to have you will need some documentation proving that you have made those payments. But even if they're just on your credit file, um, my understanding is from what you said, and I might be misreading, you said you applied for a mortgage with Coventry, meaning you went to the bank and Coventry has turned you down. All things being equal, looking at this, I could get you a mortgage. That's why you go to a broker and not to the bank. So I have quite often quite often have people come and say, "Oh, I can't get a mortgage because the bank has turned me down." Just because a bank you don't meet their criteria, it doesn't mean you can't get a mortgage. It just means you don't meet that bank's criteria. And if it's since August 2020, all things being equal, based on what I do, what little I do know about you, Mark Anthony, I could do a mortgage for you. Okay, so obviously I wouldn't go back to Coventry. That's one of the lenders that I work with, but I would go with someone. And before you even pay me a dime, I would have already talked to the lenders and said, all right, I have a client. They had a missed payment in 2020. I talked them through the credit thing before we even move to that other stage. But as I said, Mark Anthony, this is the difference between me and a lot of brokers. I do that work first, so there aren't any surprises. We have 1 minute left, and are there any more questions? Any more questions? All right, I think it's been a productive call. Um, do my fees include that? So it's 99 and 295, so it does include that. Okay. Okay, please send your so my contact details are on here. Also, as I said, I will send an email, just reminding you. I appreciate everybody's time. I imagine some people are just coming from work, and I'll put my email in there as well. I imagine people are just coming from work, so I appreciate. You may have heard my daughter in the background, so we're all in the same boat. I'm here to assist you. You know, my thing is about building relationships, so you'll never get any pressure from me. I will work at your pace, but a little bit faster. So, you know, I need what I need in order to get started. I'll keep you up to date. So if you have any friends, any family, I love talking to young people that aren't looking to buy now but want to prepare themselves. Make sure that you tell them about service. And I've put my phone number, and my email is a.lindsay at Charles Charles Crown financial.co.uk. I'm licensed and registered FCA qualified broker. So if you are going to email me or if you're going to call, what I'm going to need from you, first name, last name, email address, and phone number. So first name and last name as it appears on your official documents, your passport, email address and phone number. What I will do is I will send you access to my portal. We'll arrange an appointment. This is basically how my first appointment usually is. I just go through all the ins and outs and ask questions. And then from there, I get moving. I'm here to help you. I appreciate everybody that was on this call. And as I said, please share my details with anyone you know. Although I do love working with first time buyers, I also do buy to let. I do commercial and semi commercial. I can work with small, with portfolio landlords. So any of your mortgage needs, I can cover off with you. I love working, as I said, with first-time buyers, and also people that have complex needs due to missed payments or CCJs. All right, we're going to sign off. And again, thank you, everybody, for attending the call. Have a good evening.